What's good, everybody? Welcome to the Closing Beat. Happy Thursday. I hope you had a good day today. The stock market's had another good day today, and this is the show where we're going to cover that. We'll go over the good, the bad, and the ugly, and while we're covering it, you can see all kinds of great stuff to help you kind of understand what happened in the markets today. I'll try to share as much with you as I know. If I don't know, I won't share it. That's the rule. We're fiduciary financial advisors, SEC registered at Jazz Wealth here, and we just do this show just to update you on it. If we help you in some way and you feel like our service is of value to you, you'll check it out. If not and you learn something, maybe you subscribe. It's a win-win for us, so we do this show every day. So thank you so much for everybody that has supported us along the way. If you're one of our customers, tonight we have Wine and Wealth. I've got 3 very important things to cover. Wine and Wealth, by the way, for our clients, is basically just a class we do once a week where I teach them something different that maybe they didn't know, need a refresher on. Maybe we go into more detail about the stock market, investments, things that I just can't do publicly because of the SEC. They require it, actually, and they would slap us if we did. So every week we get together with our customers and we just have a live class. It's also recorded for them. And tonight we're going to do family IRAs, spousal IRAs, and all the geeky little things inside of that are IRS rules and regulatory rules that maybe some of you are breaking, and I want to make sure we cover it. So we'll be doing that. So that'll be tonight. Okay, the stock market, you see, was higher again today for November. First day of November, new money coming into the market, supposedly. And you got the Dow higher by 1%, the S&P higher by exactly the same amount, 1.06%, and the Nasdaq adding almost 2%, again standing out as one of the bigger movers. We do have earnings to cover. We will get to Apple earnings. A couple things you should know. The markets basically started that solid push higher today after a tweet from President Trump. So we make the joke, hey, a tweet can actually move a market. It's not our tweet, so we have been tweeting on our Twitter. We don't move markets, right? So a couple things we did tweet out today was the jobless claims to the lowest level in 45 years. So people that are filing for new unemployment, that's the lowest level in 45 years. And I actually kind of tweeted out like, don't you think that's a bad thing, right? Everybody's like, yay, strong economy and everything. Don't you kind of feel like that's hitting the top and the peak? I don't know. I get a bad feeling when I see things like that. Also, I don't like when stats are really harped on. I like to cover stats and do everything, but it's just a statistic. So in the Dow Show today, we covered the stats for how many times Apple beats earnings, how many times they beat revenues, what's the average price swing in the entire life of Apple for the stock, and actually all of it is playing true right now. We'll cover that in a moment. But one of the stats that was focused on today by all financial media was that November, and they were doing this just to make you feel good, November has historically been a positive month. And in fact, the last time it was negative was 2012. I really take issue with that because where are we starting from? We're starting at lows for November, right? We sold off pretty aggressively in October, so it wouldn't be that hard to post a positive year. If you go back and look at some of the Novembers in the past, it was sort of similar. Not as aggressive of a sell-off, but we were starting at the lower end, so timing has everything to do with it there. Also, I don't like when everybody focuses on one thing and then it's like, well, then we can't lose, right? The market's major averages should be higher. Just when you think. I would have liked to have seen them go, let's look at Novembers during midterm elections and see what happens then, because we know, it's an important week next week, and so we know that's got to play into it. That creates volatility and everything. I would have preferred to take that stat a little bit further. I did not have time to do that, otherwise I would have today, but I was focused on other things. I do love stats. Okay, let's get into the stock market here a little bit. You could see on the screen there the chart basically showing minute by minute a very, very strong day throughout the day and holding near highs, not much volatility there. Here's the S&P 500 continuing to break out and above through its downtrend. We pointed out yesterday, just by drawing a simple line on the chart, that it did break above but was unable to close above the downtrend. That's a key word, by the way, for anything. If you call it a breakout, a break above or below the 200-day moving average, a break of an uptrend or a downtrend, closing above is something that everybody focuses on as being important. Some people even say a close above and then follow through the next day. Well, we'll see what happens tomorrow, but you can see the S&P 500 higher on the day. The Nasdaq still unable to get back above the 200-day moving average, but breaking through the downtrend, and the Dow really showing, at least as of now, the best supporting move, getting back above its 200-day moving average. It's going to be weighed down. Well, we'll see what happens through the conference call Apple's got going on right now But one of your biggest movers in the Dow was Dow DuPont. Big earnings beat there, up 8%, so that was a big supporter of the overall Dow today. Apple, of course, was lower initially. I haven't checked in just a moment. We'll look in a second. But it was lower initially. That will weigh on the Dow tomorrow. And of course, everybody's talking about that. So let's look at the individual sectors real quick. We got semiconductors killing it. This is the second 4+% day in 3 days. 3 days, 4+%. So semiconductors really strong. And if you dig through the sector real quick, Taiwan Semiconductors, that's a leader in the space, up 2.5%. Intel also up almost 3% actually. Micron Technology 6%. AMD killing it off the 200-day moving average. Again, I kind of been pointing that one out to you guys with that 200-day there, up 11%. So you kind of get the feeling that semiconductors deserved the rally that they had today. Financials, a little bit of a positive day, about 0.5%. I'll take it. I'm not complaining about that one. Regional banks also by about 1%. Same thing, coming off those lows. That's all good. I'll point out the Homebuilders again. Holy cow, 3.5%. So really, really strong moves in these Homebuilders. I guess the word got out, right? So we've been talking about, don't you kind of want to buy the downtrend there? We've got sector rotation here. I pointed it out the other day. The volume indicates that big money is just moving into this area. It is not speculators or people taking their chances, because I don't believe the short float or the short positions, short percentage across the industry was very large. I know obviously there's a lot of short covering in there, but I don't think it was very large. I haven't checked. But in the last 4 days, the home builders are up 10% off that 52-week low. Now, they're still lower by 20% on the year, so it's not like they're like super strong sector, but 10% in the last 4 days. That's incredible. Semiconductors, by the way, that is 12% in just the last 4 days. So you try to get an idea where the money's at. If you're an active trader, if you're an active investor, whatever it may be, you want to know what's good, what's going on. That's gives you a little indication there. Oil breaking a new lows there. We commented about that earlier this week. They'd probably just sell off a little bit more. That's about 3% on the day. So that's more than a little bit. That's a pretty good little sell-off there. In stock news, you want to do it? Should we just go right over to Apple? So Apple, really all that anybody's sort of focused on. You can see Apple has remained near the highs, but that's basically all anybody cared about. Here's the deal. With Apple, we talked about it on the Dow show, 88.2% of the time they beat on earnings. So we said, look, if you have to make a bet, would you bet that Apple would beat on earnings, or would you bet that they would miss on earnings? You got to play the odds there. 76.5% of the time they beat on revenue. They always guide a little light, so they tend to beat. They've got their earning things figured out there. But would you bet on it going higher or lower after that? And so the question became, well, what happens going forward, right? What's the type of price move that you see? And so we briefly talked about it where there's about a 5.1% price swing when they report earnings, meaning the range from high to low, not the gain or the loss for the day, the actual range following the earnings announcement, but with a total only gain of almost 1.5%. So what that means is there's a lot of volatility, and it means that ultimately, it's plus or minus 1.3%, 1.32% is the actual number, but plus or minus just a little gain or a little loss. That's exactly what's happening right now. So just by looking at those stats and sort of kind of understanding how things work, you know that the fact that it sold off, 4 or 5% after the earnings there immediately came out, and now after the conference call, you're going to see more volatility. You know that that is just Apple being Apple. So today's Dow show was all about knowing the investment. And now you know from what we talked about before the earnings to now actually it happening in real life, you know that that's just Apple being Apple. There's nothing to fear. There's no problem. Everything's good. Services, by the way, if you follow their earnings results, services was the big one because the real number, and I'm not a conspiracy guy, they even tell you, I believe Apple will even talk about it on a conference call going on right now, the real number for services was plus 27%. That's a 27% gain in services. You got to discount what happened a year ago, take off 10%. The real net number is 17% in services. And why do I say that's a big deal? First of all, sorry to get ahead. Services is what Apple should and is focusing on going forward. They want to increase that. Why? Because they've sold so many iPhones over the years. they can't really keep coming out with more and more phones and expect to drive revenue that way. They do, and apparently very well. The average cost of an iPhone that they sold was like $796. Everyone was only expecting it to be $750, which is still a lot, but still, it was much higher than expected. So they're selling the iPhones. However, to continue growth, they're looking to build the services division, meaning now that you have the phone, how many times can you press the button and they get your money from you? So they've got all kinds of different efforts going on there. The fact that that grew, to me, means that the stock falling initially there, that's a buy. I mean, I can't tell you to buy it, but I think you'll see analysts go, hey, the dip that you saw is a buy. Because of that. You know what I mean? So Apple did really well. Yeah, $793 was average iPhone sales price. Wall Street was expecting $750, okay? Now, Apple doesn't guide lower. You know how we say they raised their outlook for the rest of the year or they lowered their outlook when we talk about earnings? They didn't guide higher, right? They missed on guidance is another way to say it. And so, but that's normal. 22% of the time, Apple guides higher. It's 22.5. So they guide higher. Nobody was expecting them to guide higher or to say, going forward, we expect a lot of strength. They said a lot of positive things about their efforts to double up on services, but that's basically it. I don't know. Do you want me to say more stuff about Apple? I mean, I got a lot of stuff I could say, but I don't know. All good, basically, with Apple. And yeah, you could see the chart there. I get carried away, man. I had other stuff I wanted to cover today, too. Spotify. I had only lost 5% today. So Spotify came out with their earnings. Earnings beat, revenues beat. They added a lot of users on Spotify. My wife was one of them. She signed up for it. Sadly, still very much overpriced. You ever look at this company? They don't make any money, right? They have a excuse me, they got a ton of money coming in and they lose it all, right? They're negative. They're operating in the negative. Add to that you really have no voting rights on this at all. You're just a shareholder. You don't get to vote on anything at all. And it's the stock price getting punished there. Hey, you remember Fitbit? Fitbit was one of the big winners today that kept coming up on the radar. 26% gain on the day, right? They beat by 3 cents on revenue. 3 cents on earnings. They beat on revenue. Everything was great there. So you go, well, what happened, right? The company didn't, going forward, the company didn't say, we're doing really well and we expect to continue to do well. They actually kind of said a little bit of the opposite, right? It's a one single device. So how come this stock was up 26% all in one day? That's called short covering. So this stock is heavily shorted, by the way. So positive earnings today forces people to buy back their shares. Maybe we ought to do a video on that for the beginners sometime. But to me, this was about 86% short covering on the day. And just some people that think, well, that's the bottom on Fitbit. They're going to turn it around. They're going to be a real player in this space. No, they're not. Roku up 4%. So 4% on positive results here, which caused Wedbush. Wedbush was the guy that upgraded it. I happened to catch him on TV. He's not very good compared to other analysts. However, I won't call him bad. He has a 48% success rate and a 2% loss on all of his suggestions so far. So if you happen to follow him, you wouldn't be profitable. I don't know if that matters to you. Anyways, he said that this pullback, which, yep, you can see it on the screen here, this pullback is overdone. He's basically telling you to go ahead and buy. AIG was higher by 4%, even though they reported a much bigger loss than expected from Hurricane Michael and Typhoon Japan. I don't remember the name of the typhoon, but that one. A lot of losses there. Casino operators, if you happen to be following that today, a lot of little news going on there. Wynn Resorts higher by 12%. Las Vegas Sands also got about 12% by the end of the day there. Good China numbers, right? Overall gambling revenue was higher. I believe it was, did I write it down? Gambling revenue showed a 2.6% increase, which was the highest in 4 years. Now, there's this argument of whether Macau, I don't know how often you've heard that. There's this argument of is that a really profitable venture? 27 months in a row, gambling revenue has been going up. So all this beating that these guys have taken for this, sort of all the money they've spent over there, really starting to pay off. I don't know. It looks like it. I mean, I'm not sure. We'll find out how much Wynn was able to take advantage of it. So I think you got a lot of people getting ready to say good things about it. Caesars Entertainment, by the way, it was in the news a couple weeks ago that Tillman Fertitta or whatever his name is was going to try to buy him. It seemed like more of a publicity thing. Caesars basically shot him down. However, they reported earnings and actually not bad. And they said that while Las Vegas was soft as far as revenue goes, they expect the next quarter to be really well. And so I believe the stock price was up. I don't know why I can't actually see that at the moment. Google, Alphabet, you probably saw the walkout. All the employees all around the place staging a walkout. That's not good. I don't want to get into that topic, but did you see that? That's not good. We'll see how much the media wants to pay attention to inequality, sexual harassment, things like that, because here's the media's chance to bite on a big story, right? And so if they just brush this one away, it will just show the bias in the media. I'm not taking sides as far as politics go, but this seems like an opportunity to make a gigantic story, to really beat it up. Horrible. Well, where'd that leave me off? Oh, SeaWorld. Did I cover SeaWorld yet? SeaWorld a little bit higher today, also on an upgrade. An analyst said, did I write his stats down? 55% success rate, 5% growth. An analyst has price target of 35. I just wrote it down because, look, 35 takes you to brand new highs. He says that the whole turnaround plan that they have and the money they spent to add all these new rides, I got to go ride the one in Orlando, by the way, the new shark roller coaster. He said he thinks it's going to do great. People are going to keep going. Never mind the economy possibly slowing down. He says all that aside, this stock's a buy. He's got $35 as his price target on that one. And, you know, after covering all that, those are pretty much your top gainers and losers in the markets today. Wynn Resorts, 12%, one of the top in the S&P. AMD, we talked about already. Dow DuPont, also in the Dow, higher. Applied Materials, Semiconductor, Microchip. LRCX, all these guys in the same group there. Anything oil related, oil exploration related suffered today. You can see the price of oil down almost 3%. So sort of normal there. Yum Brands giving back pretty much everything from yesterday. It's a fun stock. I don't know why I like that stock. Marathon Oil, yeah, I already said that. The oil service companies, all pretty bad on the day. Yeah, that's pretty much all I got for you. So as far as that goes, that's the day, right? Like I said, everybody would be focused on Apple, but I wanted you guys to know that other things were going on. Oh, Starbucks. Starbucks reported as well. They did really well, actually, even in China. Where are they at here? Let me just take a look. If you're still interested, I'll stick around with you. 64, 65. Wow, big move on Starbucks there, breaking to all new high, 52 new week. However, I can't talk anymore. 52-week highs on earnings, trading around 64, 30, 40. It's wiggling around a little bit at the moment. I don't think I'm connected here. I think this is delayed, to be honest with you. 15.3 million rewards members, right? That was sort of something that people were thinking, you're not going to get people to sign up for rewards points. And they really have done a good job with that, especially digitally, getting them on there. That was quite a task. Chipotle could learn a thing or two, by the way, because Chipotle's had a hell of a time with their rewards program. Same store sales. Anytime you're talking about a retail chain and earnings come out, want you to go ahead and take a look at the same store sales. Anytime you're talking about a Spotify, a Sirius XM, Pandora, or if they're still around, then you're talking about subscriber counts. Netflix is a good example. So with Starbucks, everybody's going to look at same store sales. They came in at 3%. We were only expecting 2.3 or yeah. So global same store sales coming in at 3%. That's really a big number for Starbucks. 2.3 was all that we were expecting, and that's what the analysts will focus on, or anybody, if you read an article or anything from here or see somebody on TV, they'll focus on that. I haven't caught anything yet, but I would imagine any upgrades that come because of this are all going to be because of those same store sales, because that's a great number, just from what I know so far. Jaron, Mr. Regional Bank himself, yeah, we covered that. They're looking good, man. Added another 1% today. The regional banks are sort of like flying under the radar as far as not getting much attention. Everybody's focused on the big banks. They're up 7% from the lows there. So I get it that there are other sectors that have been up a little bit more, but looking sharp there. I would expect that to take a break for a few days in the short term if you're playing it that way. General Electric, 5% lower, right? Was it 5%? Yeah, they lost 5% today. New lows. I think that makes like 1, 2, 3, 4, 5. 5 out of the last 6 days have made new lows, or have made new lows prior to the day before. So you get the feeling of a bit of a waterfall there. They cut their dividend. You got people that just think about what happened there. We're getting ready to do the same thing here at Jazz. You've got a stock that was paying a dividend, a good one, and maybe met the criteria. Like a mutual fund or a ETF or something that's focused around dividends now has to adjust. How do they adjust? They pluck out GE and they put in whatever comes up next. Well, when you pluck out GE, you're selling that stock. They have no use for it to hold it somewhere else. So over the past few days, you're just seeing steady adjustments to mutual funds, any exchange traded funds that are focused on dividends. There's not a lot of popular ones, I guess, but that's really what you're seeing there. So notice the volume. Oh, shoot, you can't even see the chart. I'm sorry. That's your lesson of the day. Why is GE selling off? We talked about it earlier in the Dow Show where we go, what happened? You know, like you react to an investment because you don't know what happened. Here's a great one. These are just mutual funds that are focused on having income in the fund. Like the goal or the objective is an income fund. If you look at your 401k, you got a growth section, you've got a target date section, you've got an income section, maybe a stable value. Those are becoming more popular. And so you've got these sections in your 401k. In the income section, I promise you probably every one of those mutual funds listed owns shares of GE. Well, all of a sudden this isn't an income stock. This is what do they call it? They call it a recovery story, or I can't think, maybe that's what I was thinking of. It's a recovery story, basically. So we're all cheering them on, but for the moment, they're not paying anything that makes them better than another stock. And so all those mutual funds are slowly selling it. We can verify that by the volume. Just look at that back there in the background. Why would there be so much volume trading in the last few days? So there you go. Yeah, and then if you have a price target, Brianna's like $5 to $8. You like it at 5? Are you a buyer at 5? I don't blame you, right? Give the new CEO a chance, but I don't blame you. Apple wasn't bad, just future Q1 blind to them. Yeah, from last year, financial investor. Yeah, I pointed that out. If you put that back into the services growth, you get 27%. So I don't know how many people are going to do that, but that's one of those little blurbs, and I'm like, oh, that's a good thing. I would put it back in there. How do we get our financial advice when you retire? I always wondered how that works. Where am I going? Why would I retire? That's the beauty part about it. I am within the same range of age of a lot of our customers. I'm 36, man. What do I look, right? I'm not retiring. Can't you tell I love what I do? Yeah, good job on the on buying the dips on the gaming stocks there. Very rewarding. Very rewarding. Now you just need a target, David. Where are you going to sell on the way up? Nice. Okay, well, I think I've covered everything. I don't like to take too long of your time if I don't have to. Everything is all covered. You can let me know in the comments section if I have covered things in too great a detail today. I feel like maybe I went a little too detailed, but it seems like you guys like that. I like talking about it. I can go on and on about it. So I hope you enjoyed. If I helped you in some way, first, priority to me is if you hit the subscribe button. That would mean the world to me. That's great. Of course, we're here. We hope you check us out at Jazz Wealth, but that's secondary. I'm on a mission. I've got a goal. I want to speak in front of the industry. I want to give them stats. I want to show them how you guys actually care and what you know and don't know about investing in retirement. And in order to do that, I have to look like I'm somebody. I don't know how to get more people to help me look like somebody other than if you subscribe, and then I can use that data to show what you guys what you know, what you don't know, the comments you leave. I'm saving all of it, using it, because I like the stats now, don't you? You know I like stats. All right, also, possibly some big news coming. Just saying.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.